Welcome to Matters Financial, Geopolitical from the Frontier. Thank you for stopping by. I'm always grateful. Let me start with the dollar is heading for its worst month since 2011. And this is purely on Janet Yellen, who morphed into a pussycat Yellen and has basically put the risk back on global markets for now. Home thoughts. I love this photograph. Effie, camera Ndio Hio, camera Ndio Hio, hanging out with these kids. It's a photograph is taken in Zanzibar. Rather tragic story of Mohawk the King on his march, wrote Paras Chandaria a month ago. This is a lion, male lion in the Nairobi National Park. Today the king lies dead from a human hand. Put up a photograph of a ranger preferring to shoot him rather than tranquilize him yesterday, and leave you with the Latin words sic transit gloria mundi. Political reflections. The United States has told China it will not recognize an exclusion zone in the South China Sea and would view such a move as destabilizing. U.S. Deputy Secretary of Defense Robert Work. We don't believe they have a basis in international law, and we've said over and over that we will fly, sail, and go wherever international law allows, Work said. We have spoken quite plainly to our Chinese counterparts and said that we think an ADIZ would be destabilizing. We would prefer that all of the claims in the South China Sea be handled through mediation and not force or coercion, he said. Work spoke as Chinese President Xi Jinping prepared to visit Washington for a nuclear security summit this week. And the question is, who will blink first? And it's quite engrossing to watch, because you can see the Chinese, what they're doing is ratcheting higher incrementally, as it were, and trying to avoid the pain point when the US might react very dramatically. The question is, the US is being sort of teased to put up or shut up. How ISIS built the machinery of terror under Europe's gaze is Rukmini Callimachi in the New York Times. I'll just go through a few points. She's making the day he left Syria with instructions to carry out a terrorist attack in France. Reda Haim, a 29-year-old computer technician from Paris, had been a member of the Islamic State for just over a week. His French passport and his background in information technology made him an ideal recruit for a rapidly expanding group within ISIS that was dedicated to terrorizing Europe. Over just a few days, he was rushed to a park, shown how to fire an assault rifle, handed a grenade, and told to hurl it at a human silhouette. His accelerated course included how to use an encryption program called TrueCrypt, the first step in a process intended to mask communications with his ISIS handler back in Syria. The handler, code-named Dad, drove Mr. Ham to the Turkish border and sent him off with advice to pick an easy target, shoot as many civilians as possible, and hold hostages until the securities made a martyr of him. Be brave, Dad said, embracing him, and then saying that the person who oversaw the Paris attacks, Abdul Hamid Aboud, was known to Islamic State operatives in Europe as Dad. It's a factory over there, Mr. Ham warned his interlocutors from France's intelligence service after his arrest. They're doing everything possible to strike France or else Europe. One of the first clues that the Islamic State was getting into the business of international terrorism came on January the 3rd, 2014, when the Greek police pulled over a taxi in the town of Orestiada. The Orestia was a play I once watched at the National Theatre, less than 4 miles from the Turkish border. Inside was a 23-year-old French citizen named Ibrahim Boudina, who was returning from Syria. In his baggage, the officers found 1,500 euros and a French document titled How to Make Artisanal Bombs in the Name of Allah. Within the hierarchy, Abu Ud was specifically tasked with mounting attacks in Europe, according to the French police report and intelligence brief. Abu Ud, known as Abu Omar, was the principal commander of future attacks in Europe. Very detailed and interesting article. Put up a photograph of Abdul Hamid Abu Ud, and then jumped to another article I came across in Der Spiegel. Activating the sleepers, Islamic State adopts a new strategy in Europe. The threat is no longer limited to individuals known to the police or already on wanted lists, but also comes from those in the shadows in the second or third rank. Even jihadists who have not yet been identified by officials are now capable of striking. For some time, unsuspected aggressors have been discreetly trained, have infiltrated targeted circles and built up long-term sleeper cells. This is a modus operandi that has now been employed by terrorists against prominent and often well-defended opponents multiple times. The people behind this terror are proving to be surprisingly far-sighted, patient planners, and not rash actors. This applies in both Europe and Syria. This is the new and long underestimated side of IS. The length the Islamic State goes in order to install sleeper cells is illustrated by a less-known case. Have a look at that article as well. It's a very interesting point they're making. The origin of this strategy, which Der Spiegel is outlining, actually belongs to somebody that the Islamic State would consider an apostate, Hassan Sabah, which is in some regards ironic. Hassan Sabah, according to Wikipedia, and there are many books that you can read on him, converted a community in the late 11th century in the heart of the Alborz mountains of Persia, later seized a mountain fortress called Alamut and used it for the headquarters for a decentralized Persian insurrection against the dominant Seljuk Turks. He founded a group of Fedayeen whose members are often referred to as the Hashashin or assassins, saying that from the time that they took Alamut, the community and its branches spread throughout Iran and Syria and came to be called Hashashins or assassins, also known as the Fedayeen, meaning the martyrs or men who accept death. And a very famous assassination was of Nizam ul-Mulk. And when Hassan Sabah received the news of his assassination, he says, "The killing of this devil is the beginning of bliss." Put up an image of the artwork of Nizam's assassination. And that takes me to the article I wrote over the weekend about countries paying a heavy price for less costly terror attacks. And the return on investment for a terrorist attack is extremely high because they're not spending huge amounts of money, whereas the countries are spending billions and billions. I suppose, I was talking about the fat tail people prepared to do these kinds of things, essentially 21st century Fedayins, if you see what I mean. Let's move on to international markets. US 2-year yields have dropped to the low since February 25. This is on a very dovish Janet Yellen, as we discovered. Moving on to the currency markets, the euro is now at 113.54. And we've got to keep an eye on that. 114.50 is the key area. Dollar index 94.96. I'll show you a 1-year chart in a moment and where the key support is. Japanese yen 112.42. Swissy 0.9651. The pound 143.90. The Aussie 0.7673. India rupee 66.355. South Korean 111.4328, Real 359.61, Egyptian pound 8.87, and the rand is below 15 and a big fat 7. Let me put up a 1-year chart of the index, and you can see that the key area of support is around 93. Given momentum, we're probably going to go and test that level, but then I think it will be an awesome buy. Euro dollar now trading 113.60. The key here is 114.50, where we've failed a couple of times, so we've got to see how we behave up there. Risk appetites return. Global stocks measured by MSCI World have all but erased their 2016 loss. Ireland sells first 100-year bond to complete its comeback trail. It's really a tremendous story. And just on a negative note, Japan's Nikkei has dropped almost 12% in the first quarter of 2016. Worst quarter since Q3 2015, and that's all about the yen strength and the impact on Japanese exporters. Gold at 1233.10, the key area, as you can see from the chart, is around 1250. Crude inventories rose to the highest levels since they've been calculated in history. And we've sent crude oil back down. I'll put up a one-year chart, and I think, whatever happens with the currency markets, we look heavy and we look as if we're going down to 30. Zambia's Lungu in trouble as opposition gains backing of ex-ruling party leader Scott, and defections mount. This is in the Mail and Guardian. Zambia's main opposition party's chances of winning general elections in August received a boost with the announcement of support from Guy Scott, a former acting president of the Southern African nation. Scott served as president for 3 months after Michael Sata died in office in 2014. I don't cry about it. That's not going to bring anything back. He said the only thing to do is to go and wallop. It's going to be a very tricky election for President Lungu. Economy under tremendous pressure. Angola has raised its benchmark rate to at least a 3-year high. This is they raised it to 14%. Inflation is now at 20% in February, driven by higher domestic fuel prices and a weak currency. The Kwanza has lost 17% of its value against the dollar since the start of the year. It is the worst performer of 23 African currencies tracked by Bloomberg. South African all shares up 3.55% year-to-date, had a strong session yesterday, rallied 1.37%. And the rand strengthened beyond 15 against the dollar for the first time since December the 21st, and was set for its first quarterly advance in 4 years. Who would have believed it? It's up 3.4% so far this year. I think he's selling now. Egyptian EGX30 is up 6.84% year-to-date. The Nigerian all shares down 11.28% year-to-date. Ghana Stock Exchange Composite Index is minus 4.07% year-to-date. Coming to Kenya, the World Bank said it forecast Kenya's GDP would expand 5.9% in 2016 and 6% in 2017. That's from 5.6% predicted expansion last year. The most recent Kenya economic update attributes this positive outlook to low oil prices, good agriculture performance. This is the fact that we were one of the few beneficiaries in Africa from the El Nino effect that produced more rain for us. Supporting monetary policy, ongoing infrastructure investments, etc., ahead of the report's launch in Nairobi. Have a look at this chart that Trendblazer tweeted out. Kenya has signed a $5.42 billion railway extension deal with a Chinese firm. Wednesday's deal with CCCC, worth $5.42 billion, is to extend the line from Naivasha to the town of Malaba on the Ugandan border, said Wilson Yakera, Principal Secretary in Kenya's Transport Ministry. Have a look at this photograph I took of the lunatic railway in Mombasa, Nairobi, one just outside the entrance to Savo East, and then this railway crossing just outside Manyani Gate, Savo again. Equity Bank said it paid 4.5 billion shillings for its Congo bank acquisition. The bank said the transaction completed last September was valued at 1.54 billion shillings, lower than the 6 billion shilling estimate. Transaction involved Equity Bank ceding 1.8% in the group to ProCredit, with an additional 1.6 billion being a cash injection. Company issued 17.897 million additional ordinary shares to finance the acquisition. The value of shares was calculated with reference to the quoted price. Equity paid a goodwill of 2.2 billion shillings for the Kinshasa-based lender formed in 2005 by international development companies and ranked 7th largest bank by assets in the DRC. ProCredit had more than 170,000 customers distributed in 23 branches at the time of the acquisition. Net assets of 2.9 billion, including a loan book of 13.3 billion, 7.7 billion in cash, and deposits on properties and equipment. Other shareholders with 21% in ProCredit are the German Development Bank with 12% and IFC holding 9%. Equity booked an after-tax profit of 126 million from the Congolese operation, and estimates it would have earned 414 million if the deal had been completed at the beginning of the year. This would have made DRC the most profitable regional subsidiary of Equity Bank. I put up a link for Equity Bank share price data. I just mentioned my friend in Kinshasa today says they've spent a great deal of money refurbishing their branches and saying the business is unrecognizable. National Bank reported a full-year loss after tax of 1.53 billion shillings. Loans and advances actually grew by 3.94%, but the full-year loan loss provision went from £500 million shillings to 3.7191 billion. Profit before tax was therefore a loss of 1.63 billion versus a profit of 2.43 billion previously. Earnings per share negative 3 shillings and 75 cents versus 3 shillings and 11 cents previously. Bank attributed the loss to heavy provisions and loan impairment charge, which increased by 3.2 billion over the period. Bank's non-performing loan portfolio is said to have skyrocketed in the final quarter of 2015. NBK Acting Managing Director Wilfred Musau said that the reduction in profits resulted from heavy bank debt provisions and higher interest expenses. Increasing provisions is a prudent practice in accounting. We have further put elaborate steps in place to manage the recovery of this position, he said. Well, we knew this was coming, but it's not good. And I take you back to 2015 at the time of the first half results when I copied Sunil's tweets at the time when he said the rise in profits in Q2 was from writing back NPL provisions. Risk-weighted assets down despite increase in lending. Industry's ratio of provisions to NPLs is 41.3%. NBK had a ratio of 11.2%. Tullow, which discovered Uganda's oil, has a seat at the talks. The pipeline decision is, however, above our pay grade, they said. Total came and reported full-year profit after tax accelerated 13.4%. Gross sales down 11.153%. Profit before tax up 15.057%. Profit after tax up 13.4%. Sales volumes increased by 7%, but net sales decreased by 22% because of the drop in international oil prices. The company took a forex loss of 320 million. These were solid results, and it's a solid franchise. Kenya shilling 101.30. Nairobi All Share up 0.62% year to date. NSE 20 down 1.47% year to date. Just to go through comments by Janet Yellen in particular, this caution is especially warranted because with the federal funds rate so low and the FOMC's ability to use conventional monetary policy to respond to economic disturbances is asymmetric, proved a red rag to the bulls. The market saw this as a confirmation that the Fed will tread with circumspection and extreme care and bought up riskier assets and sold the dollar. Kenya shilling tends to react more immediately than the stock market rallied to a fresh 6-month high around the levels we are now. The NSE, however, drifted a little bit low. We had a lot of earnings releases yesterday. Kenya Re, which is minus 9.4% in 2016, and I think you can appreciate from here, it's always traded at a big PE discount to its peers. But if you look at its results, they're considerably more stable and less volatile than its peers. This time, Liberty Life reported a 35.939% deceleration in full-year profit after tax, skipped the dividend. Liberty said that both long-term and short-term lines of business in Kenya and Tanzania registered positive growth in core insurance earnings, but that this year's performance was delivered against the backdrop of an increasingly challenging operating environment characterized by intense competition from traditional and non-traditional players. They also spoke to mark-to-market impairments and said that the value of investments in both listed equities and bonds across the East African market experienced a significant decline. It was a difficult year from a mark-to-market basis, but again, Liberty is a well-managed franchise. Pan-Africa slumped 8.75%. It's down 39.166% this year. National Bank closed at an 11-year low, and as people anticipated those full-year earnings, which we've talked about, Standard Chartered up 16.41% in 2016, rebounding strongly. Bamburi Cement was very heavy, 1% so far this year, and probably got more to go because they've seemed to have done extremely well from increased cement demand. Cables, very poor results, closed at a record low. Trans-Century traded unchanged at a record low. Have a look at the wrap-ups from yesterday if you're interested in the entire subject, because there's a lot of information that came out. Once again, thank you for stopping by. I'm always grateful.